Tomorrow is a pivotal day in markets because we get the CPI reading, which is the Consumer Price Index, which is a great reader of inflation and whether or not this inflationary issue we've been battling for the last few years is going to cause some turmoil in markets or some continued rallies in things like the stock market and perhaps the gold market as well. In this video, we'll be talking about setups. I'm going to show you a trade that I just took. I'm also going to show you my ideas on gold, the indices, and much, much more. Let's jump in. So to start out this video, I figured we'd take a look at where everything is currently at, and I bet you if you watch this video back in a few days, these charts will look very different, maybe screaming higher or dropping suddenly, but let's talk a little bit about this. So the S&P 500 has been really strong recently, same thing with the Dow and the NASDAQ. These markets have been really resilient, but meanwhile, we have things like the dollar index also rallying off of strong economic data and perhaps some expectations that inflation could be hot, but again, we'll get into the CPI game plan in just a moment. The euro dollar is dropping and I shorted it this morning, so I'm feeling pretty good about my position. We'll talk a little bit about that in a moment. The pound dollar also dropping and gold seeing a pretty big drop down to 2015 at the time of recording. Meanwhile, oil is jumping up on what I think is actually a strong rebound in China potentially brewing. It's why I have positions there, and we'll be talking about that later on in the video as well. Let's keep going. So first of all, let's talk a little bit about the main event, which is the dollar index, because this week we get the CPI number tomorrow at 8:30 a.m. US Eastern. By the way, I'll be live streaming that event if you want to join me for it. Make sure to hit the notification bell so that you can get notified when we go live. So the dollar index has been trending up recently here, and tomorrow is make or break, I think, for this move. If you're going to see a continued rally in the dollar, if there's any true bearings to this, you need CPI numbers to be higher than expected. So if CPI comes out hotter than forecast tomorrow, I think it really sets us into motion for a bigger push higher on the dollar index. And that's of course because if inflation is hot, it will probably mean that the Fed will keep interest rates higher for longer, which higher interest rates 101 is strong for the currency. And so again, we'll watch CPI to see how that prints, but likely if a hot print comes out, the dollar index will find support and bearings around 104, and perhaps this is a new floor for the dollar index. However, if you get the opposite, if you get cooling numbers, this dollar rally could completely fizzle out, and again, if you break this upward momentum, the dollar index could be headed lower for a while. So that's why tomorrow's number is so critical, and if you trade currency pairs, gold, or indices, this is meaningful to all of those. So if we jump in now to the price of gold really quick, I'll show you this, and in just a moment I'll also show you a position I took on the dollar here this week. So let's look at gold. So interestingly, prior to CPI, we do see gold coming down. Why is this? Well, the US economy has been stronger than expected in many measurements. PMI data, etc. We'll look at some of that in a moment. But again, readings have been strong and this has been pushing gold lower. And if you do get a hot print on CPI tomorrow, we very well could be breaking this 2010 level and perhaps even beyond, back into the 2000s or the low 2000s, or even into under 2000 territory. That is all on the table if you get a hot print. And now if you're a gold bull, the opposite could be said if we get inflationary numbers cooling. Now on this channel, I don't predict what CPI numbers are going to be. I don't have a quantum computer in my backyard that will help me to decipher exactly what inflationary reads are going to be before they present it. And I don't think most of us do. And the good news is you don't actually have to have that to still make money in the markets. You can still look for trends. You can look for stories unfolding. And again, if you get a really cooling inflationary number, perhaps rate cuts are back on the menu and gold could rally from there. By the way, the Edge Finder currently shows a pretty strong reading for the dollar. We have USD JPY, USD CAD, dollar Swiss, and Kiwi and Aussie dollar all printing in favor of the US dollar. They've been doing this for a little bit and it's been playing out well. We'll see if that continues going into CPI. And while I'm on the subject of the Edge Finder, I should mention that for this week, CPI week, we are doing the Edge Finder currently 35% off if you send us a direct message using the first link in the description. So when you click that link, it'll take you to a place that looks like this. Just hit chat now, and right here, if you hit Edge Finder 35% off sale, again, it is a limited time sale. You can get a copy of the software to help you trade throughout this event and future ones. By the way, it's a one-time fee to get access. You pay once, you have access to the tool and all of our updates. We're a team of 10 here total between everybody on our software and internal team at A1 Trading. We've been been working on this tool for almost 2 years, and if you don't have a copy by now, I just want to say we do have plans to raise prices. We are currently restructuring and adding way more features to the tool, but if you do get it on this 35% off sale, you'll be picking it up before all of that happens, and you'll get all of the future benefits without any additional cost. So again, click the very first link in the description if you're interested in picking up a copy. So I sold the Euro USD. This is currently one of my positions. I am still bullish on the dollar, and I will say this is a small position, but if the CPI number plays ball, meaning we get a hot read, it is very likely that this move continues. We've seen some momentum headed downwards in this currency pair, and I'll continue to watch it. But one thing that led me to sort of being short biased here and especially bullish on the dollar was the COT reports, and I'll show you that real quick. So here's a look at the commitment of traders data on the Edge Finder. So we have net positioning from institutional money. What are they buying? What are they selling? And if you look right here, you can see that in the weekly filing, right? So this is once a week reported from the CFTC. We have this data here, which shows us that the US dollar saw an increase of 1,200 long contracts, and that's a net, it represents a net change of 1.63% in terms of a bullish change. That is actually pretty significant. And I think it's especially telling as we go into a CPI event that big money seems to be moving into things like the US dollar. Also, by the way, into the Japanese yen and gold. So actually kind of a risk off sentiment here coming into the Edge Finder's commitment of traders data that we see here on the screen. And the S&P 500 has been in a straight line to the upside here for weeks on end now. I think something like 15 or so weeks overall have been bullish in the last 16 weeks, something of that nature. But the point is, you take a look at the weekly chart, it's just been a straight shot up here since when, we really got bullish in October. Now, I was early to this idea. I took a couple losses along the way, but I ultimately did catch most of this run. Recently, I have been selling, cash secured puts on several sectors that I like, which has been helping me to still make some money in this rally. But I still think that there is some pullback due here on the S&P 500, as well as the NASDAQ and the Dow. If we take a look at the daily chart here, where could that pullback come into play? Well, I think if you kind of just get constructive here with your price action, it's pretty quick that you can see, again, overbought readings are probably fair to illustrate. Now, does that mean it has to come down? No, but what could bring it down would be a hot read on inflation. You take a look at this price action, and it is unsustainable to continue to go like this. I think even if you're a bull, you can acknowledge that, straight line price action does not last. It doesn't move, like that forever. And so when we start marking up our charts here, I do think that it's possible that we start to get a bit of a corrective move here. Now, whether it be this week or weeks to come, I don't know. But personally, I am bullish and waiting patiently for a pullback on these things. And once we get it, perhaps I'll start to actually get long once more. But for now, staying patient, and I'm using, sort of my covered calls and my cash secured puts to still profit in this move, but waiting patiently to get filled on some of my orders on these charts. NASDAQ, same story. I do like the idea of getting long the NASDAQ on a pullback, and I think that this is a very, very moderate pullback to expect if you do see a corrective move. This is only a pullback, by the way. That's like a 2.5% pullback. Also possible that we could see a bigger one, like a 5% pullback, which would be very normal in a bull market. So I'm not necessarily thinking that, this market's got to roll over right now, because it can continue like this for much longer than people might think. However, I do think it's appropriate to wait for a pullback personally before getting back into some of my trades. So I'll continue watching. So I mentioned the euro dollar trade that I'm in. Part of the reason for this is, check this out. So we've seen a pretty big shift here. So what was a institutional money flow just consistently buying the euro? What I thought was interesting is that we saw sort of a shift here. And I think that, what could be taking place here is you could see smart money slowly starting to actually unwind some of their long trades on the euro with all this economic data coming in real strong for the US. Again, the blue line represents what institutional money is. The red represents retail sentiment or retail positioning. And the white line is, of course, sort of the price action here of the euro. So you can see it's been trending lower, starting to change directions. And smart money really took advantage of a lot of the move back here and has been sort of flat, and now possibly even starting to get short on this move, perhaps anticipating a bigger trend to the downside on the euro dollar. So as we approach CPI tomorrow, something to consider is the jobs data that we had recently. Jobs were really, really strong. And as you know, jobs jobs can be inflationary. A strong jobs report can mean, people are employed, they're taking out loans, they're buying things, they're shopping, they're traveling, they're vacationing, whatever it is. That can be inflationary. When people have jobs, they spend more money. More money being spent is inflationary. We've added some cool features here to the Edgefinder's NFP report. What you can see here is that there's the latest jobs number, 353,000 jobs, and noticeably the yellow line represents revisions. So they actually revised higher the previous month's numbers, which, again, a really big print here from the jobs data that we got. So I think that this is another thing to consider when talking about CPI and the overall picture for the US dollar going forward. This is really strong, and until this changes, I think you have to be at least cautionary on getting too bearish on the dollar. Another pretty bullish thing for the dollar recently has been PMI numbers. Here's manufacturing and services PMI on the Edgefinder. You can see they both have ticked up and actually beat expectations, showing some strength in the US economic output. And when you see these numbers, PMI numbers generally are leading numbers. They're important, concepts. And I've got a video coming out on this topic here this week, which may be helpful to you if you're somebody who watches PMI data. Stay tuned for that. I'll have that video for you in the second half of this week. And before I move on from the Edgefinder, let me just remind you, remember, we're doing 35% off. If you do want to take advantage of that huge discount, click the very first link in the description, speak with a rep, and get that price locked in before the prices go back up. And it finally happened. My Chinese stock market trade is actually in profit.
I smell profit.
I didn't know that was possible, but this market has been real tough. This is the Chinese large cap ETF FXI, which I trade on my brokerage WeBull. If you're somebody who's looking to trade ETFs like this, you can use my link down below in the description if you'd like to support my channel. But I did get some oversold readings here, and overall, when you enter into these, this is the A1 extension zones, and when these levels kind of get breached, the point that I try and get at with this is that you have a really overall sold off market in order to get into these extreme levels. And so I was watching that with kind of a close eye, got my entry, went ahead and picked it up on a longer term basis. I think that this market could rebound, but again, kind of surprising to actually see it back in the green. And what this does, by the way, is it actually stimulates potentially the oil side of the market as well. So check this out. So oil will likely go up in the event that Chinese economic growth starts to rebound. If that happens, they're a huge consumer of Brent crude oil, and of course that increase in demand could also spike the price of oil. So these two trades go hand in hand for me as I continue to watch that trade. So we'll watch that, and again, a nice jump in Chinese equities. Again, here's the CN50 USD. This is a CFD you could look at or even trade if you trade with OANDA or certain other brokers that offer this. But again, a little bit of a rebound, and looking at the daily chart, you can see we've kind of broken this downward structure, and perhaps we're starting a new leg higher. And here's my current positions. You can see there's my FXI trade, just barely in profit, which again has been in the red for some time. So cool to see that. And then you take a look at some of the other options trades: XLK, IWM, XLY, XLC, XLE. Almost all of these, except for the energy ETF, are in profit here. Nice overall gains, and up about $2,500 on the day. So not a bad move, and we'll take it here for the day. Again, if you want to trade options or you're interested in options or learning more, there will be links down below in the description to sign up with WeBull, which is what I personally use to do so. I also have a silver position, which is going pretty well, and the dollar position as well. So we'll continue to watch these things close. Thanks for tuning in, and I do want to just say, please be careful trading CPI. A lot of people lose a lot of money trading these events. Be careful, be cautious, trade safe, and have a great day. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.